Good afternoon. This is James Perry at Perry Capital in Miami. It's June 18th, and the Fed, as expected, did not cut interest rates. Today, I want to talk about 3 or 4 things before going on a business trip. Number 1 is the economy doesn't need more stimulus from the Fed. It's doing well enough as it is. GDP will be 3.8% or higher in the second quarter, and inflation figures that the Fed looks at are as low as they've been in 15 months. That's very good. The problem is households and small businesses still face massive inflationary pressures. Aggregate prices are probably still up at least 25% from 4 or 5 years ago. So Donald Trump called Mr. Powell today and said, I think you should cut rates. They should be at 2% or 2.5%. Powell, of course, will not answer. The point is, those interest rates are market driven, and the market still fears the biggest thing in the U.S. economy right now is what's going on in Washington. This government must cut spending. We are causing inflation because of deficit spending and excessive debt. If we had less debt and less deficit spending, interest rates would in fact be at 3%. And frankly, I think that's where they're going to be in a year. The stock market's doing well. The S&P is still at 6,000. Gold is firm. Interest rates are low. Dollar's stabilizing right in here, right where it should be. I think the second or third other big point that I really want to make today is that peace in the Middle East is probably closer at hand today than it was a week ago. I think the G7 and Israel would like to see regime change in Iran. I'm not sure you're going to get that. The Chinese obviously don't want it, and Putin's been quiet on it, but I don't think he's pleased. They are, after all, not in Syria anymore. The global geopolitical story is still a big one. I think that spending cuts in Washington really is important. I doubt the U.S. equity market, as measured by the S&P, will break above all-time highs anytime before spending cuts materialize. And I think that if you get peace in the Middle East, that will be very, very bullish for interest rates, inflation expectations, and the U.S. economy, not to mention European economies and the Middle Eastern economies. So Perry Capital remains overweight stock market, very selective, technology and defense, and gold, of course. And I think we're going to be in a pretty good shape here as we go into July 4th weekend and this weekend, and relax and enjoy yourselves. Have a nice weekend. Bye.